Uniswap just proposed something that could burn $700 million worth of UNI tokens. After 5 years of generating over $5.2 billion in protocol fees without activating the fee switch, governance is finally voting on turning it on. But here's what most people are missing. This isn't just about burning tokens. The weekly chart shows price sitting right at a critical confluence of every major moving average, fighting a descending trend line from the December 2024 top, while the Heikinashi RSI just printed its second green candle after 12 consecutive red ones. I'm going to show you exactly why this technical setup, combined with this proposed catalyst, creates a risk-reward scenario I haven't seen in UNI since last year. Let's break down what's actually happening. Uniswap is trading around $7.30, sitting in what I consider a critical decision zone. Over the past 2 weeks, price broke above a more recent descending trend line that had formed from the August local top, but it's still battling the bigger trend line from December's peak. What makes this moment interesting is the timing. Uniswap just recorded its highest ever monthly trading volume in October at $116 billion. Yet the token price hasn't fully reflected that strength. Then, on November 10th, Uniswap Labs and the Uniswap Foundation jointly announced the UNIfication proposal, and UNI surged 50% on the news alone. Market sentiment around DEX tokens has been mixed, but there's something happening beneath the surface that could change the entire narrative for UNI specifically. The fundamentals tell us exactly why this level matters, and why this governance proposal is creating so much attention right now. The proposal that just hit Uniswap governance could transform the entire economic model. Instead of liquidity providers capturing all fees, the protocol would activate fee mechanisms that burn UNI tokens and send sequencer fees to UNI holders. According to the data, if this fee switch had been active since launch, we'd be looking at roughly $700 million in UNI that would have already been burned. But let's talk about what this means if it passes. The proposal would allocate a small percentage of protocol fees, 0.05% of the approximately $2.8 billion in annual fees, to monthly UNI buybacks worth around $38 million. That would put UNI in the same buyback range as established protocols like Aster and Pump, while still trailing behind Hype's 80 to 100 million range. The key here isn't just the burn mechanism, it's the incentive structure it would create. Uniswap maintains absolute dominance in DEX volume. Last week alone, UNI processed over $20 billion in 7-day volume, leading the entire decentralized exchange space. The protocol just launched its continuous clearing auction protocol on V4, which helps teams bootstrap liquidity and launch tokens more efficiently. And here's the part that matters for price action. V4 already surpassed $10 billion in trading volume on Arbitrum alone, accounting for 7.6% of all V4 volume. Now, one analyst pointed out something crucial. V4 hasn't yet crowded out V2 market share. Instead, V2 is actually gaining on both V3 and V4. But if this proposal passes and the fee switch goes live, liquidity providers would be heavily incentivized to migrate to V4 because fees on V2 and V3 would be turned on before V4. That's the migration catalyst that could shift massive liquidity into the newest, most efficient version of the protocol. The proposal also includes a retroactive burn of 100 million UNI from the Treasury, representing what could have been burned if the fee switch had been active since launch. That's approximately $800 million worth of tokens at current prices. The governance vote is expected in the coming weeks, and the community response so far has been overwhelmingly positive, with UNI surging 50% on just the announcement alone. Looking at the weekly time frame, UNI sits at one of the most compressed technical setups I've tracked this year. Price is currently around $7.50, right in the middle of my load zone between $6.85. All the exponential moving averages, the 10, 21, 55, and 100, plus the 200 simple moving average are bunched together, creating massive resistance that price is actively fighting. The Fibonacci retracement anchored from the 19 December 2024 high down to the 4.75 April and October lows shows the first major resistance at the 236 level, around $8.15. Above that, the half retracement sits at $11.90, which is my first major target. Notice that descending trend line on the chart. It's been in place since December with a clear rejection in August. Last week, price broke above a more recent descending trend line from that August top, which had 2 rejections in September and October. That break is significant, but we're not out of the woods yet. The bigger trendline resistance sits right around $9. Now let's talk about the Heikinashi RSI. Look at those orange circles I've marked on the chart. Every time over the past 2 years that this indicator dropped into oversold territory like it did recently, it preceded a strong bullish move. We're now printing the second green candle after 12 red ones. That's a pattern I've learned to respect. Volume profile shows the point of control sitting right at $6, acting like a magnet for price. We're very close to that level, which provides solid support. For my position, I'm working within that $6 to $8.50 load zone. For short-term traders, my stop loss would be a weekly close below $5.50. That invalidates the structure for me. For long-term holders, I would still consider this an accumulation zone, and if we break lower, I would look to reload around $4. My take-profit targets are $11.90 for the first position, then $19, $28, and $40 for longer-term holds. I'm using trailing stops. Once we hit first target, stop moves to entry. Second target achieved, stop moves to first target. I told my Telegram community to take partial profits when we hit that descending trendline rejection around $9, as we had entered around $6.50. That was a 35% move in a single day. If the unification proposal passes and the fee switch activates smoothly, combined with V4 adoption accelerating, we're looking at a move toward $12 within the next several weeks to months. That's the 0.5 Fibonacci level and my primary target. The best case scenario has UNI reclaiming $19 if we get a broader DeFi revival, sustained volume growth, and successful implementation of the fee switch. Worst case? The proposal fails in governance voting, or a weekly close below $5.50 invalidates this setup and suggests we might retest the $4 zone. That wouldn't mean UNI is done. It just means the timing wasn't right for this particular trade structure. Timeline matters here. The governance vote is expected within the next few weeks. Short term, I'm watching that $8.20 resistance closely. Long term, if the fee switch implementation happens over the coming months, it should provide consistent buy pressure that compounds over time. What changes my thesis? If the proposal gets rejected by governance, that's obviously a major setback. If DEX volume across the board drops significantly, or if V4 adoption stalls while V2 and V3 continue dominating without the migration incentive, that would be a red flag. Also watching for any regulatory complications that could delay implementation. Bottom line, Uniswap just proposed activating the fee switch with a potential $700 million retroactive burn while dominating DEX volume and launching innovative new protocols on V4. The governance vote is coming soon. Technically, we're compressed at every major moving average, with an oversold RSI bouncing exactly where it has bounced before major moves. The risk-reward from 7 to 12 first target is worth paying attention to, especially if this proposal passes. If you found this breakdown valuable, hit that like button and subscribe for more setups like this. I post faster updates in my free Telegram group. Link is in the pinned comment below. I recently covered other DeFi protocols that are showing similar technical setups, so check those out if you want more actionable analysis. Let's see how this governance vote plays out. Thanks for watching, never financial advice, and see you in the next one.